Hello and good early afternoon. This is George Papazov. I'm the president, founder here, and head trader at Trade Pro Academy. I want to welcome you to today's midday update. We're going to talk about a few things in today's presentation in terms of the equity market, where it's at, what type of trade you can expect through the Thanksgiving holiday and the rest of the year, as well as some seasonality that we're going to look into, and where I think the next 10 to 30 points is going to be in the SP 500. We're going to look at oil and gold and then wrap it up for the YouTube update, and then our subscribers are going to get some trade ideas. I'm going to dive a little bit deeper. All right, I want to remind you the information of this presentation is for educational purposes and not constitute investment advice. The risk in trading markets can be substantial. You should carefully consider if doing so makes sense for you and your financial situation. All right, we are not responsible for any liabilities arising as a result of your market involvement or trade activities. All right, let's get started. I got a lot to talk about today. And let's get started, first of all, with where the market is and what we're seeing here on the S&P 500. Yeah, let me just close this. Quick little pen check. Great. S&P 500, I was laughed at. I was scolded and told I was outright crazy for thinking it's going to go to new all-time highs. And here we are, new all-time highs. A guy on YouTube the other day was telling me in the comments that I should buy puts. I wanted to respond, but I had nothing nice to say. I was going to start off with, I know where you should go, but I didn't get there. So here's what we're looking at. We got some upside. We touched above the 2200. We wanted these 2200s all August and September on the S&P, but we couldn't do it. Before we touched these 2200s, we had to shake out some late longs that came to the party. And sure enough, we did that in September, try to accumulate some more momentum, went sideways, and it took the election to wipe out a ton of longs. And if you look at the S&P 500 on a technical chart, I mean, you understand the frustration that a lot of these buyers are facing, right? They started buying off this post-Brexit. It recovered. Nobody expected this recovery to be that quick. And then every new trader or newer trader that's battling the emotions of when to get in and couldn't get this low ended up buying it above the high. They took the breakout trade. Okay, when you miss the dip trade, you always buy the breakout trade and you get burned and destroyed. Try not to do these trades very often. They don't pay off on a larger time frame. So look what happened. So a lot of people started to get long, and as soon as that happened, market went nowhere for 2 months. And then we shook some long or late longs out of that trade, consolidated, and then it took taking the price right back to almost where we started post-Brexit on the previous massive downside or unexpected event that came to fruition. And you know, the whole Trump ordeal, when I wrote an article about it the day before, I said, you know what, I had a bad feeling that the unexpected is going to happen. This feels like Brexit again. So anyways, got that low. We've rallied off it. And just when we shook out all these longs and we had no more longs looking to buy, and guys commenting on my channel telling me to buy puts because I haven't been doing this for 12 years and I need advice from somebody on YouTube. And, you know, when somebody starts talking like that and everyone else like, this thing's a joke, it's going to go down because they've seen this dip, everyone starts to short the thing, and there's not as many buyers, and that creates the upside. This here is the stop losses of the shorts that didn't think this high could happen. That's what's happening here. This thing moves based on stops being triggered, not based on people getting into trades. That's the S&P 500 in a nutshell. No stops go untouched in the S&P 500. Tattoo that to your forehead. It'll help you for the rest of your career more than any other education you'll find online. But now that we don't have as many longs, now we can hit all-time highs. Let some of these guys off the bus. Now we're at all-time highs. The question is, where do we go from here? Well, the important part is we bounced off this 200-day moving average. We bounced off this lower Bollinger Band, and momentum's kind of back on our side. We might be a little bit overbought at this time, but careful fading this thing, because if you faded here, here, or here, you would be wrong. One of these times it's going to work. I just don't know if this time is it. Let me bring you up to speed on some seasonality here on the market. All right, look at this. In November, right now it's the 22nd. If we go down from the 20th onwards, in fact, from the 16th onwards in November, all you have is green, green, green for the rest of November. The majority of gains happened before Thanksgiving. So the trade here is buy the S&P 3 days before Thanksgiving and sell it the Monday after, and you got a chance to make about 4 or 5% return. You see that here? That's kind of where it's told us. So for the rest of November, I think we've got a lot of green that's happening at the moment. We got that upside. We stay flat to end November. We get a really strong day to end November, and then we start December again kind of flat with no movement. Where do we start getting more upside? In the middle of December for the Christmas rally. So here's how seasonality breaks out. you have some good opportunity here in November to get this turkey trade, buy it before, sell it after Thanksgiving, and then really don't mess around with the market after. It's going to be slow, and then buy again mid-December. The last day of November is very bullish. Keep that in mind, November 30th. Now, a lot of mutual funds and hedge funds get redemption requests that they have to liquidate some assets. So typically the end of the month could create some volatility. All right, so that's what we're looking at here. So should you fade or short this thing? Go for it. If that's what makes you happy, take a shot short. I'd rather be doing premium strategies that are writing or selling option premium up top, which are not directional. They say, I don't think it's going to go up this high. Whether it goes up a little and stalls, whether it stalls or goes down, I'm going to make money by shorting the upside instead of shorting and going directional outright, because going directional outright costs you money in the form of time value decay, in the form of having to be right. And I hate it when things cost you money. I'd rather receive money for something that's a lower probability event to have a high probability chance of success. That's what shorting call spreads is all about, or selling call spreads. I'm kind of looking at that for some ETF with some subscribers. With these subscribers, we'll talk about that after the general update, and I'll show you some ideas I got floating around to collect $500 to $600 of premium by the end of this week with about $5,000 capital. All right. So for those of you that know what I'm talking about, it's 4 to 5 trades I'm looking at the moment to create some short premium strategies around this rally. That's the S&P 500. Where do I think it could go? The problem with where we are at the moment is we're at blue sky highs, and I can't tell you. Typically what I do is I scroll up if we're down here and I say, hey, look, there's a lot of chop here and here. We're going to probably stall there. Well, I can't tell you that right now. All I know is from the dip that happened in early February to this entire rally, to the retracement, okay, all these levels found support. So if we look at Fibonacci extensions, this is our only real reliable tool at blue sky highs. So what you could do is click the Fib extension tool, and you got two options. You could grab the A point here to the vertical extension up there to post-Brexit low, and that will actually give you a projection to the upside, and you're targeting about 0.76 to about 1.0 on the maximum on the upfront side. And if you project or extend the average move, so you do something like this, you can see we could probably get about the 2,300 towards the beginning of 2017. All right, actually mid-month 2017. I'd say 2230 to 2260 is kind of the upside for the year. With the Fed rate hike decision looming in December, mid-December, it's already built in. There's over 90% probability the hike will happen. So the market knows about it and doesn't really seem to care. But I think when it actually happens and they set the hike path for 2017 going forward from the Fed, that could be what spooks markets a little bit and causes us to pull down a little. But overall, there's no reason to be short this market at the moment, because what you're getting is higher highs, okay, higher lows. And despite all these fluctuations and gyrations that people get all caught up in, the longer trends to the upside. So play with the trend. If you're a swing trader or not a day trader, then you already know this. You had a chance to buy some dips here. Do not buy it right now. If you're buying all-time highs, you're going to have a very hard time making money in trading. Very, very hard time. Because the moment you buy the all-time high, this is usually when the early are selling it to you, and when early shorts are trying to trade to the downside. So there you got a double wave of selling pressure, and you're in there saying buy. It's kind of like everyone screaming sell, sell at the pit, and you show up and you say buy. You're going to get absorbed really quickly. You mean nothing to the market. Get rid of this notion that you have to be right to be profitable. What you have to do is execute properly to be profitable when you trade. If you're looking to be right in the market, you're going to get slaughtered. You're going to get slaughtered, and it's going to get really ugly really quick. Okay? That's why I hate it when people say, where do you think the market's going? I'll tell you tomorrow. I'll tell you tomorrow what it did today. The question is, when will you get long? And that's a much harder question to ask. So stop trying to be right, guys. This isn't a business where you're right. This isn't like your regular 9-to-5 job where you get paid for being right. Here you get paid for execution. You're more of an athlete on the keyboard trading than you are a 9-to-5 employee, because you have to execute. You can practice all you want. I'll use the hockey analogy. When you get a tap on the shoulder and you get on the ice, you better give it what you got and execute. Okay, you're an executioner. Not really, but Your job is to execute it. It's not to call levels and go in there and say, I think it's going to go up here. Who cares where it's going to go? The market doesn't give a you-know-what about you. It doesn't. I'm sorry. Or me or anyone else. What you got to do is pick location. Right now, don't buy it. It would probably be the stupidest thing to do right now is to buy this level. I mean, there's probably more stupid things, but this would rank up there really high. So that's S&P 500. I wouldn't buy this high in a longer time frame. On a shorter time frame, I wouldn't buy this high. All right, you wanted to get long, 93 was your chance, and I did it, and I'll prove it to you. Here, let me put up my CQG terminal. I bought them at 92.25 on S&Ps. All right, dumped some, holding on to a little bit. I'm probably going to dump it at 96.5 for this recovery up to VWAP. So this was your chance to buy. If you were scared to buy on the pullback, well then, buy it now. I'll sell it to you. I'm actually getting ready to do it. Let's go back to SP 500. Let's look at oil. All right, oil's been very volatile in the last few sessions with this meeting looming and these production cut jawboning. I mean, forget all this nonsense. Nobody cares about this stupid production cut. Who cares if they cut production? We're going to cut it 4%, they said. Big freaking whoop. The market's oversupplied. There's no demand for oil. Demand's gone down. The EIA, the Energy Association, said, you know what? Demand is expected to cut in the future, and there's going to be less people needing oil. We're going to be consuming less oil. It's been a really warm winter where I'm at, and we usually get destroyed with snow by the time it's like October. All right, so less need, less requirement for the black goo. And these guys are out there talking about a 4 to 5% cut. Woohoo, big party. The dynamic is it's an oversupplied market with decreasing demand. And you're going to continue to see downside in oil. Sell these rallies, 48s and above. I'm looking to get short. Missed it today. But there's an opportunity to get short. Who cares what OPEC says? If they bring it up to 51, great. I'll short the 51. All right? Just try not to have long-term bias or have some kind of bias, but get paid as well. Don't just see it move and not get paid. I hate it when people do that and they say, oh, I think it's going to go up here. Did you get it? No, I didn't. Well, then what's the point of thinking? All right? You might as well just go have a mojito on the beach and not think about this stuff. Nobody really enjoys thinking about trading. All right, you do it and you move on. 50-10s. I wanted you guys to be a little quirky today. I'm not upset. Somebody might think I'm upset listening to this. I'm just, I think I had a little bit too much caffeine today. That's the real truth. Above here, I'd love to sell it. I said 47 to 48 is great zone to try a short. I wouldn't be surprised if by February you find yourself trading 39.5s to 40s. All right, so we got some downside to fill here in oil. I think it's coming. Right now, watch for updates from this meeting. The meeting in Vienna happens on November 30th. OPEC had a technical meeting, meaning they're discussing the merit and the idea and the execution of how they would cut production. When oil dropped this morning, it was on the announcement the OPEC committee said to defer the decision on Iraq and Iran production cuts until November 30th. All right, and they're discussing a 4 to 4.5% cut for each member of OPEC except Libya and Nigeria. Iran, Iraq, and Indonesia said to have reservations about this whole idea. So it's not a done deal. On oil, by the time it happens, by the time it's rumor, you want to buy it. By the time the news comes out, you want to sell it. Okay, upside for oil, I think we're going to find a lot of resistance at these 49s. And despite getting above 49 temporarily today, we got sold off really hard. You got to drill down on a smaller time frame and start to ask yourself, where were there battles where longs lost? Well, a ton of people got long above 48.80. How do you think they feel right now? Not so good. A ton of people got long above 48.20. How do you think they feel right now? Not so good. So do you think that as we rally out of this little box that we're consolidation we're forming, do you think that as we get up here at 48.20, the people that bought here are going to want to sell and say, I just want to get out? Absolutely. They're going to sell here. What do you think is going to happen? It's going to push price lower. So look for 48.15s to 48.20s to try to enter the short. Try to ride it down, recognize the trend line or trend channel, work with it, not against it. Fading oil will get you destroyed. You're going to get punched in the face. It will laugh at you and punch you in the face a second time. And you're going to say, I'm going to go report you for abuse, and it will follow you to the office you're going to report it and continue to punch you on the walk. It's not a fun instrument. It's not a good place for newbies to try to learn how to trade. This thing could leave you high and dry really quickly. But that's what I'm saying. Follow the trend. Okay. I've drawn the lines. I've given you the levels. I'm looking myself for about 48.19 with probably stop a little bit above this high, 48.40. So you're looking at 20-cent stop on oil. Let's look at GLD or GC1 gold. Today, it's found some more downside, all right, on a 15-minute chart. But I'm starting to think this 1200, 1204 to about 1210 is starting to be a really good support, all right? And it's come out of this once, come out of it twice. It tested as support on the third time. We just got in there the fourth time, and it peaked above it right away. So what I would do is probably look to buy some 1210s on gold. Let it come down. Try to buy 1210 to 1212, anywhere in this zone. Target maybe 1226. I do think on a longer time frame, gold's got some upside. We're in a seasonal strength time period at the moment, but these dips are not getting bought into very successfully. All right, same idea on gold. Support once, twice, 3 times, 4 times. On the 5th time, even the guy that just started trading 12 seconds ago says, hey, that's support. Look, it's support. Let me buy it. And boom, that's what happens. Okay? When it starts to look too obvious, it ain't going to work. Now we're about the 50% retracement at 12.11 on gold on these fibs from this low to this high, which is November of 2016 to the high of this year. Okay. Actually, December of 2015 to the high of this year. I apologize. That trend on the upside has retraced. It's let a lot of these late buyers off the vehicle. So now I think we see some upside. Support continues to be 1200 to 1210. Where you pick your entry, I can't tell you. It all depends on your time frame, your strategy, how much time you got to look at these charts, how long you've been trading for, what kind of capital you got, all right, what vehicle you're going to use, ETFs, all that stuff. I mean, you want those questions answered, sign up, become a subscriber. TradeProAcademy.com/earn package, and I can work with you. Earn dash package. There's oil, there's gold, there's SP 500. What else do you have to look at? DXY, dollar index. As long as it stays above 100, all right, you got the opportunity here to buy euros, or sorry, sell euro and buy US dollar. But I think at some point there's going to be a snapback or a reversion to the mean, and it'll find probably 99.5. That's my call on the dollar. All right. So in fact, I'd be rolling over as a currency trader if I was a big currency trader. I used to be, not as much anymore. I would start selling the US dollar and start buying everything against it. Buy the Jap yen, buy the euro. All right. Buy the GBP. Create yourself a little basket. Diversify between these three. There's 3 pairs that you can buy. And I'll show you why I think that. So if you go on currency strength charts, what time is it? 20 minutes already. Jeez, I got some trades to do with you guys. If we go on the currency strength charts and on a 4-hour template, and we wait for some reason for it to load, I actually just got to be patient with it. I'll show you why I say that. Come on, load up, will you? All right, the slight orange thing here is the pound versus all other currency pairs. So basically just created myself currency strength. I've added one currency against all its counterparties that are trends, and I've created an index out of it. And it's loading them all. So let it load. I'll get back to that point in a second. But yeah, on the dollar, we're at 14-year highs. We've taken out some of these highs here. I think a lot of people are starting to realize, whoops, I might have bought this high. And that means it creates a lot of sellers. There's buyers here. There's buyers here. There's buyers here. There's shorts trying to short this darn thing at about 140. All right? Those shorts have gotten squeezed out. These buyers have started taking profit. These late buyers aren't getting paid. What do you think that means? It's a triple whammy for some downside. So let's see if the currency strength's working again. There we go. What's strong? Well, the strength here is, the strongest one is the blue one, which is the euro. The euro's been strong on a 4-hour. On a daily, it would probably have to recalculate them. Come on. The US dollar, no doubt, is strong. It's the purple line. Okay. What's weak? This little brownish line. What is that? That's more than likely going to be the Jap yen. Okay. So there you go. Buy the Jap yen. I think that's the trade for the next couple weeks, for some reversion to the mean. You could see that eventually when it becomes really opened up like this and they diverge to a strong extent, they usually snap back at least temporarily. But realize you're fading, okay? And if you're fading, you got to have tight stops. You can't sit there and try to hold on to your conviction. If it continues to go up, you got a GTFO. Get the you-know-what out. Try it again at a higher level. So look for execution. Look for precise spots to reverse on these trends. Don't just blindly do it. Become a subscriber, and we could teach you a little bit more about that. Our futures course starts tonight at 7 p.m. Eastern. If you haven't signed up, you definitely should. It's free for tonight's lesson. And then you're going to learn a ton. I promise you. Just tonight, I'm going to teach you a ton of stuff that you're not going to find online. Why? Because it actually works. The stuff I'm going to teach you works. It's how I make my money. And I do it. I trade every day. You can see arrows on my charts. I'm not one of these guys that talks about trading and then takes their money and goes to the beach to take marketing pictures or go buys a Ferrari so I can post it on YouTube as a lifestyle brand. I don't care about that stuff. I always have arrows on my screen, which means I'm taking trades with you. All right. It starts today at 7 p.m. Eastern. Go to tradeproacademy.com// futures course. You're going to learn a lot. Talk to you about order flow, what time frames I'm using. I'll tell you the software I use. I'll give you all my templates, how to read order flow, how to find traders that are trapped, find traders that are about to get stopped out, how to read volume the right way, not the stuff we put on the chart, what charts to use. A lot of people use time charts. If you're using a 5-minute, 1-minute chart, 15-minute, if you're using a time-based chart, you're not making money. All right? You're having a hard time making money. You're using outdated technology. There's much better charts out there for the day trader to help you make about $200 to $300 US daily. And that's my goal. In this webinar, I want to show you how to do $200 to $300 US daily with $5,000 of capital. If that doesn't excite you, then have a good day. I don't know what more to tell you. Join the webinar, save my spot, put your deets in here. It will help you out. You can find more about what we teach at tradeproacademy.com// futures course. Last call. It starts in 5 hours. Hope to see you guys there. Take care, YouTube. All the best. Hope you enjoy this update. If you have any questions, let us know. Just a reminder, all this for education purposes. Let me end the webinar here. For our subscribers, hang tight. We'll talk about some trades. Yes, and I'll answer that question. That's a very important question. So, all right, take care, YouTube. All the best. Remember, it's Thanksgiving on Thursday, and you need to know this. The markets are closed on Thursday in the United States, and they close early on Friday at 1 p.m., which means tomorrow's your last trading day. Tomorrow's going to be thin. A lot of the traders across the proprietary desks and banks are already gone, okay, especially in the U.S., already done for the week. So don't force anything out there. And if you got the day off on Wednesday and you say, I'm going to day trade just because I could take this day off of work, well, guess what? Nobody's going to be trading with you, okay? So keep that in mind. Tomorrow is going to be slower. There could still be movement. There's opportunity. Thursday, the market's closed. Friday, it closed at 1 p.m. If you're trading on Friday, don't. You can't. Nothing good will happen. All right, guys, on YouTube, take care. All the best. Subscribers, hang tight. I got a few trades to show you. Update on our existing ones. And we're going to talk about the futures course in a little more detail. All right, let me just end this. You guys hold on.